Hey guys, John.Hunter, your mortgage hunter, coming back to you again with another weekly rate update. This one for February 14th, 2025. Happy Valentine's Day. So, all we ever hear from on the news is the Fed. What is the Fed going to do? Are they going to raise? Are they going to lower rates? And everybody feels that, the sky falls with the Fed or the Fed will make or break your day, right? The reality of it is the Fed does not control mortgage rates. Mortgage rates are market driven. So they will react to what the Fed's doing and they'll react to the same data the Fed reacts to, but much quicker, right? So we saw the rates really kind of seesaw this week. We had the average 30-year fix around 6.5 to 7.125. End of the week here, 15 years, 6 1/8 to about 6.65. FHA, 6.375 to about 7. VA, 6 1/8 to 6.875. Down payment assistance, 6.375 to 7.625. Remember, guys, these rates are all based on credit score, loan to value, loan type, property type, what your income level is, whether you're a first-time home buyer. There's a lot of variables that go into it. If you want an individual quote, feel free to reach out. I would love to give you a quote. Obviously, no obligation. So let me know if you want more information on that. But what drives rates, really? Really, it's all about what does the market anticipate, right? And it's a supply and demand issue, right? So when the economy slows down, stocks and other equities are less attractive, and fixed rate returns like bonds or mortgage-backed securities are more attractive because it's maybe a little bit lower return than you can get on the stock market when it's going really well, but it's a guarantee, right? The stock market may pay more, but you could lose money. You could go backwards. That's why when you see anything, these crazy situations, 9/11, for example, right? Anything that's just really terrible, a shock to the system, and they think that everybody's kind of scared. They don't know what's going to happen. You see what's called a flight to quality or flight to equity, or take it back, flight to quality, which basically puts money in fixed rate securities because they may not make a lot of money, but they're not going to lose. And then the opposite, flight to equity, meaning that they can make more money in the stock market, and you see them pull it out. So overall, that supply and demand, when the market believes that bonds are more friendly, they'll buy more of them, which then drives the rate down, that they don't have to pay as much, then the return doesn't have to be as high, and that's what drives rates down. It's a total supply and demand thing. So the market is looking at the economy. We're looking for low inflation, and maximize employment without it going too far. So the market and the Fed has been watching the same things. They want to see that inflation is coming down and that the employment is strong, but not too strong. All right, the employment one has been a big one. If you've listened to any of my updates over the last year, you'll know on how much is weighing on this employment situation, which is going to change soon. So that's the gist of it. So what happened this week, right? We saw CPI, Consumer Price Index, comes out, says inflation's hotter than they thought. This was yesterday. And boom, we saw a rate spike, right? The rates have been fluctuating between this level of 4.5 on the 10-year Treasury. It's not an interest rate, it's the yield on the Treasury. 4.5 and above. That's towards the top end of this range that we've seen for the last several years. The average 30-year fix around 7%. It's been kind of caught in that range, and it's really not found a way to go below 4.5. Well, fast forward till today. Then we saw the PPI, which is the Fed's favorite inflation guide, right? That comes out, and this was yesterday. I'm sorry. Yesterday the PPI came out. It was Wednesday the CPI. Yesterday the PPI came out, which basically showed that the core inflation, once you get out some of the more volatile aspects of it, the core inflation actually was a little bit lower than they anticipated. So boom, immediately all of the losses from the previous day erased. Now, today though, we had a very weak retail sales number come in, right? Bad economic news is good for rates. That's just kind of a given, right? I know it's kind of bad that you don't want anybody lose their job or whatever, but these are macro issues, not micro. So, very small changes in the economy that most people don't feel can affect these rates. So anyway, retail sales came in a little bit lower than anticipated, and that 4.5 resistance level, we finally broke through. This is the first time we've had a closing that I'm aware of since the September timeframe where we closed below the 4.5 since September, when rates were down almost to 6. So this is a really good sign. I'm really hoping this is a trend. right? The CPI number that came out on Wednesday was one of the last reports that was pre-Trump, right? Biden spent money like a drunken sailor on the way out the door. I'm convinced it was to completely submarine Trump on his way in by just spending all of this money just willy-nilly, right? A lot of that stuff is being caught right now by Doge and slowed down. I think there's going to be a lot of effects with that. Also, the employment situation is going to change because there's a lot of federal employees it's being downsized. So I'm hoping all of these numbers are going to be helping interest rates going forward. I do believe we're going to see inflation stay intact. I think we're going to see some real pressure for downward rates. Hopefully today, closing below that 4.5 resistance level is a big deal. A lot of times what you'll see is we'll see these resistance levels, whether it be up or down, and they'll like flirt with it and flirt with it and flirt with it. And once they break through that amount, the next stop sometimes is 0.25% or more down. It can jump down. So really hoping to watch for that. It did close at 4.47 today. So hopefully we'll see some real momentum next week. So, stay tuned, guys. Keep the faith. These rates are coming down, hopefully sooner than later. A lot of people have been calling me about, hey, has Trump had any effect on the interest rates? Is this new path forward with the country turning out to be positive? I do believe that it is. It's a process, not an event, and it just takes some time. The reports have to catch up, right? So I think here later in February, definitely in March, we're going to see some reports that are going to come out that hopefully will show that trend is there. Then you're going to have the Fed coming out talking about more rate cuts. Right now, there's not a lot of rate cut talk because the Fed really hasn't said much, and they're not going to project or show their hand. But they change tune like that, as you saw back in September, right? They can change their gear really quickly on this stuff. So stay tuned. I do believe it's going to get better. Sorry for rambling, guys. Have a wonderful weekend, and happy Thanksgiving to my girls, Rachel and Aaron. I love you two so much. And happy Thanksgiving, Priscilla. You are the best.